Welcome back. You're watching Corporate Radar. Now, International Gemmological Institute, IGI, the company which certifies natural diamonds, lab-grown diamonds, jewelry, studded jewelry, colored stones. Their IPO opens today. The company is looking to raise 4,225 crore rupees. The price band will come up for you on your screen, 397 to 417 rupees. Now, globally, IGI is the second largest independent certification provider. Their market share stands at 33% as of 2023. Just yesterday, the company also raised 1,900 crore rupees from 68 anchor investors at the upper end, 417 rupees. And some of the investors include Government of Singapore, ICICI Prudential, Axis Mutual Fund, Abu Dhabi Investment Authority, and many more. Tehmasp Printer, MD and CEO, and Eashwar Iyer, CFO of the company, are now with us on the show. Gentlemen, thank you very much for joining in.
Thank you.
Thank you. So, Tehmasp, if I may, start with you. Now, this IPO, the fresh issue is done so that you can consolidate even Belgium and Netherlands into India.
That's correct.
Now, once that is done, what would be the company's volumes, market share globally, and the financials?
Okay. So, first and foremost, let me tell you this, that IGI is the first gemmological laboratory to go listed. In the world, not India itself. So that itself is a benchmark. After it's listed, what happens is all the three verticals of IGI gets consolidated into one unit. And whatever you see from our figures, we can only go forward. And with after Blackstone has taken over, has acquired IGI, it has been a different upscaled company today. In a very short duration, Blackstone has managed to transform IGI into a global entity. And we are here today to answer all your questions. I have Eashwar with me.
So, Eashwar, you want to fill us in with the numbers? Yeah. What would the consolidated global entity now look like? And what is the growth projection? Yeah,
see, so as I was, it's in the document as well in terms of to what Tehmasp just mentioned. We have three entities, which is an entity in India, we have an entity in Netherlands, and an entity in Belgium. So we operate in close to 8-9 countries across the globe. So it's a geographically it's a very diverse organization that we have. The pro forma financials which are there in the document, our EBITDA margins are close to 56% for the 9-month ended September. And so that is the way it will turn out to be when the consolidation happens as well. There are not too many intercompany eliminations, etc. that we need to do. So the pro forma financials, the way they stand today, is representative of the post-acquisition.
And growth rate at the top line?
At the moment, we are growing in excess of 30% in India. For the 9-month ended, we are on 30-31% growth. I think the key driver of the industry today is the lab-grown segment. So that is what is really propelling the industry forward. And it's a new entrant in the industry. It's been there for the last 3-4 years. So we expect this to it's just a starting point, because most of these diamonds today are exported to the US. US is the largest retail chain in the world. From that context, this is scaling up in the US markets now. And once it starts hitting the India markets, there's acceptance to this a new entrant in India. I don't see any reason why this should not be the case. The growth should not be the case for the future as well.
All right. Hi, gentlemen, and welcome to the show. I'll tell you what, both the ladies in the studio were quite excited. They were talking plenty about diamonds from the time the show started at around 8 a.m. So we're looking forward to chatting with you all.
Okay.
Now, looking at you.
Education is important, right? Absolutely. We know we're buying. We want to know we're buying the right thing.
Both are diamonds, by the way. Exactly the same.
I guess, yes, we're aware.
So let's talk a little bit more about that then.
Right.
Looking at the way your revenue mix has changed. Lab-grown was mid-30s, which has gone closer to around 60% or thereabouts. It seems because of the pace of growth we're seeing out there, it'll constitute a larger proportion of your revenues. But what about margins? What's the difference between all three of these? Lab-grown, studded, as well as natural. Is there a margin difference? If yes, what is it?
See, let me put it this way. Overall, the margins have been at 66%, which has now grown to 72%. So that itself is an indicator of how the thing is going. Natural is unique, rare, and expensive. And where lab-grown is concerned, it's more affordable.
Correct.
Right?
So for you, where do you make more money?
We
Or is it the same?
we make more money from the volume aspect,
Okay.
and we make money from the unique aspect. So it's an overall mix, and we make money on diamonds and gemstones. See, we certify diamonds. We are a neutral body. We are an independent neutral body, which gets audited by ISO and RJC. RJC is the Responsible Jeweler Council, which looks into the ethics of the business. And of course, ISO looks into the compliances and standardization of our grading model. Okay, so we are a third-party certification, and we get certified, audited by a third party.
No,
regularly.
what we're trying to understand and get at here is that lab grown is increasing, the share is increasing,
Yes.
but it's a lower margin business.
Right.
The other business, which is natural, was a higher margin business.
Right.
So from our understanding perspective, how much is the gap in margins? If you could even give us ballpark numbers of how much is the margin for natural versus lab grown.
Okay, so again, let me take that question. While we don't try to distinguish between the, the margins for each of the categories, but what is relevant, and to the point that he mentioned in terms of the acceleration that we are seeing in the lab-grown segment, which used to be around 35-36% of the revenue mix, today is close to 60%. So while natural diamonds, to what Tehmasp just mentioned, is unique and it's not a volume game, but lab-grown diamonds is far more is a volume game because it's man-made, it's machine-made, right? So from that context, the volume synergies that we get in lab-grown is what is driving the EBITDA margin improvement per se.
So going
added to the fact that structurally, we have been always grading natural diamonds till the time lab grown made its entry in the last 4 or 5 years.
So you told us blended margins were 56% as of 9 months, calendar year 2024. So even as the contribution of lab grown continues to go up because of higher volumes, will you be able to maintain margins between, say, 55 to 60% going ahead?
Yes, of course. And in fact, it could go a little higher. And see, what happens is lab grown is a new kid on the block. Okay, it is just starting off. And it's a very affordable diamond. The consumer pie, which is very small from a global population point of view, is fast expanding. The millennials and the Z generation, are doing all the research, and they find out that both are exactly the same. So, come on.
So as
they'll
volumes
keep growing. Yeah, exactly. We're not arguing that point.
Yeah.
Definitely lab-grown diamonds are going to grow.
Definitely.
What we're trying to understand is, even with volumes picking up on lab-grown, whether you will maintain this margin profile of 50 to 55%.
See, we are so well entrenched in the manufacturing and polishing sector. India polishes 95% of the diamonds which are exported for the global market. Okay, and we are right there in the marketplace. So we are very strong on that. Plus, I mean, natural diamonds are a little bit on a low ebb currently because of the war in the Ukraine, and 30-35% of the rough for the natural comes from Russia, and there's a little embargo on that. So hopefully the war ends. Every business goes through a little up and down, and lab grown is taking it up right now.
So Eashwar, just one quick question. I think Tehmasp started by saying that Blackstone has transformed the company in the last 1.5 years, in a very short span. They entered in May 2023 at a valuation of $570 million. In 1.5 years, the valuation has swelled to $2.1 billion. What changed in the last, what is it, Eashwar, that they have done?
Just before Eashwar answers, Eashwar is tantamount of the fact that he joined the company 1.5 years ago. He's the global CFO. Now we have a global CMO. We have a global CHRO. You understand? We have SAP introduced into our organization. You understand? There are so many different things that has evolved the company to a global level. Now, Eashwar, please.
Yeah, so just to add on to what Tehmasp mentioned, I think the point that's, what we need to, just to put it in perspective, is the fact that India is the manufacturing hub for the globe. Yeah, that combined with our presence in key markets, be it the US, be it Europe, be it the Middle East, be it China, Hong Kong, there is a lot of synergy that is there in the group today. And the philosophy that we are adopting now, is the one IGI philosophy. These businesses, the way they have evolved over the last 50 years, have been running as individual profit centers. which no longer is the case. Because the strength of manufacturing in India combined with the strength of retail in the other geographies that we are present is what is probably going to propel this business forward. I think that is the key element in terms of the philosophical change or the thought leadership that is now emanating within the organization as a group today. So I think that is the key change from a leadership perspective standpoint. I think that has been one of the key drivers that Blackstone has brought into on the table, which we are obviously in the midst of executing. We've made some leadership changes in the US, etc., which is important because we want to get some people who are therefore able to grasp the importance of the change that's happening in the industry, and therefore, enabling the growth momentum to continue.
All right, gentlemen, we appreciate you all joining in. Wishing you all the best for this IPO. Today, we're letting you all go away without too many numbers, but on listing, we're going to ask you what are the projections going ahead. But interesting business, and we look forward to being in touch.
Thank you so much for having
all the
us
best.
here.
Thank you very much.
Okay.
All right, time to move on then.